All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and this is the end of week video. It is Friday, May 3rd. Today was jobs day, so again, a lot of new information coming out. A enormous amount of earnings activity, not only today but this week. I think this week was edged out last week in terms of the busiest week of earnings releases. I think even just yesterday there was 120 no, that's wrong. It was about 180 companies reported in the S&P small in the small cap index, the Russell, sorry. In the Russell 2000 there was about 180 companies reporting all in one day. So if you're a little bit winded or tired from this week, we had a Fed meeting, the jobs number, which again seems to be coming in right where it needs to be, not really getting overheated. The number that came out. Sorry, I'll gather my thoughts here in a second. The number that again, it's been a long week. So the number that came out today, everybody is always the news is always fixated about the headline number, right? And you'll see that in the Wall Street Journal tomorrow. They'll say, X amount of jobs created, but the real thing is, I think that is important. I still have the wrong screen up. The real thing that is important is inflation, right? That is what the Fed is glued to, right? Transitory was the big word from the Fed meeting this week. So this number, the average hourly earnings only came in plus 2% versus 0.3. So regardless of this very strong jobs report higher coming in higher than expected, that's fine as long as there's no inflation, right? And really that's what we want is just a investment landscape that is really not going to be knocked around by outside factors such as the Fed increasing interest rates or the dollar shooting up and going real high. We want everything kind of like in a sweet spot, right? So that there's not going to be that many outside influences, right? And then companies can do what they do. They could, perform on basically how they're, fundamentally performing, and then we can analyze the technicals and so forth and rinse and repeat. But we need a nice investment landscape, and I think right now that's what we have. Even though if you look further down to this, it does look like some things have been showing some so while the jobs number is showing some strength, again, I mean the unemployment rate is what 3.6%, which is really low. And I'll show you the chart of that in just a second. I mean, I don't know how much better than that can get, and that's something that maybe is for another conversation. But ISM non-manufacturing coming in a little bit weak. Remember, anything above 50 is expansionary. So, I think this is a fine number, 55.5 versus what they were looking for is 57. There's nothing wrong with that number. I think their expectations are just a little bit too high. The one thing that was interesting was so that was non-services. What did we get? ISM, I think on Wednesday was also a little bit weak. So that was down to 52.8. So that's something to keep an eye on, right? So bottom line, I think overall these numbers are good, and if you survive the week pretty well P&L wise, this is not easy, right? So I think that if you had a positive week this week, congratulations, you're doing a great job, especially with all the information that we got out this week and all of the earnings reports, all of the economics, the Fed meeting, so on and so forth. And it's also, I think difficult too, because whenever we get one of these even small little pullbacks, right, everybody is getting super negative, and it's really, you could lose your focus very easily in the market. I mean, I have CNBC on all day, I have Bloomberg on all day, and it's good to take in information, but sometimes it could really kind of mess up your focus and your game plan. So I'm always going to be a little bit concerned. I was talking about copper weakness yesterday and oil weakness, how that was a little bit different, how we haven't seen that all year. But these are not the only factors out there. So copper, nice to see that rebound. Don't know how much more that's going to get. We talked about this version point of control being taken out. Crude I don't think did much today. I think it was up 10 basis points. So it is still holding support. And I went through that yesterday talking about how, it's really the first time that crude has kind of come in a little bit, but it's not the end of the world, right? It's definitely something, as I wrapped up yesterday's video, saying, hey, keep an eye on a couple of these things. We also talked about the good, which was the small caps. So let me just, before we get to the small caps, let's go back to the large caps. But, we had this reversal bar obviously on the Fed day, and we talked about how difficult these Fed days are. And then we had a doji, and we came right back in. So we still have it's the first time that we checked back to the 20-day moving average in a while. But that's support, and that's basically how really strong bull markets are, is they just don't pull back that much. So that's kind of what we have going on. Are there concerns out there? Sure. I mean, all these IPOs coming out, it kind of feels a little bit toppy too, that all these companies are now going public. It's like a whole, and Kramer's been talking about that. I think he's been doing a good job, right? That does feel a little bit frothy to have all these IPOs come out there. So, what do? You basically just watch price action, right? And try to kind of weed out the noise a bit. Eventually things are going to have some bigger correction, right? But I think trying to anticipate exactly when that's going to happen is just extremely difficult. So for now, you just kind of, you watch when we get a dip. You make sure that you're kind of checking points, whether to see if you think it's going to be a more of a prolonged dip or a short dated dip. And a couple of things that we talked about in last night's video was the VIX coming in at the end of the day. We talked about how bonds weren't really well bid, and we were talking about that in the pre-market session this morning, that even when the VIX went up to 15 yesterday, 1.5, which again is not that extreme, you never really saw like a bid coming out of the bonds. They were still down. They were still going down. So it was like, all right, this kind of just feels like we needed to have a little bit of a dip. And then the small caps, which I'm on today, that was also the saving grace yesterday. I thought that was the biggest factor, was that the small caps finished green yesterday. And this looks really like a pretty decent looking chart. Now that we've gotten out of the consolidation, and you can see this beautiful green bar here, and it's out of this resistance, right? So next thing that I see on my charts is this 170 VPOC. I mean, that's a decent amount up there, and I think just something else for the bulls to get excited about, including myself right now, to see the small caps lead, right? And we could look at this in terms of small caps versus, I've been talking a lot about this. I probably show this chart in every either weekend newsletter or Friday video, but you could see IWM versus SPY is started to outperform here a little bit. It tested these December lows, but it looks like we've got something here that's interesting and notable. So we will get a lot of earnings reports again next week, but it's going to start slowing down a little bit, and I think a bit more manageable, rather than having on the pre-market mover sheet having 50 names on it plus or minus. But so I think things will kind of quiet down maybe a little bit. And so the rest of the video, what do I want to talk about? Let's talk about first performance. I want to talk about both performance, which we just kind of recapped what the indices did, but I still like to just bring this up just so that you could see it. But this is the beginning of the weekend newsletter and the game plan that we provide to members every week, which it helps me too to always to have that game plan going into the week, to know exactly what I want to attack, or if I want to sit back a little bit. But I spend a lot of time doing that, and quite honestly, I enjoy doing it. It really kind of helps me get ready for the week, because again, I do most of my research outside of market hours. When the market's open, I'm executing, and I'm reading the tape, and I'm looking for things in that aspect. But for the most part, I get all of my ideas and my research when the market is closed, right? It's when you do your homework. So really kind of some of these numbers, I always leave last week's numbers in here, which is in the red, and this week's numbers are in the green. Interesting that the S&P did not move this week. We had some big ranges day to day, but we were flat, positive for the week, but just barely. The Dow did exactly the same thing as it did last week. Small caps outperformed again. They were up 1.4% versus 1.7. The Qs, same thing as the SPY. Those two have been kind of tracking one another a little bit here and there. They were about just the same as SPY, so just positive. Again, had a couple days where the we went down, a couple days where we went up. Emerging markets did pretty well as the dollar weakened a bit. Same thing with international developed markets, also a nice positive week. That's a really nice chart too I want to get to. Bonds were flat for the week, and gold did bounce today, but still down for the week it looks like. But yeah, before I go into the sectors, let's look at emerging markets and let's look at international developed markets. Really nice to see this bounce on the 50-day moving average. It's been a slow mover. That's why I've been in January calls in EEM. I'm also in September calls in EFA. If you're not familiar with EFA, it's international. So it's international developed. What is international developed? It's mainly Europe and Japan. And this looks like it's also moving in the right direction too. So, this looks a lot different from where we were. Remember last year, 2018, right around this time, around May, we started to see international areas crumble. And the U.S. for a few months was basically the best house on the block in terms of performance. The U.S. market kept on going up, but everything else globally started to come down. Right now, we don't have that. While these things are a little bit slower right now than the U.S., they're all trending up. They all look pretty good. So again, that is just another thing that I think is a little bit different than last year, and one of those things that you want to watch. If international markets start to fall apart, then I would be worried about that, and that's a cue for me to kind of have less risk, have less versus more risk. All right, so sector performers. This was last week. I always keep last week's up as well. Interesting. The previous week, software and internet names both were up 4%. This week, a little bit different. You actually had the Chinese internet names. Names like Baba outperformed. JD did okay as well this week, and a couple. BZUN did very well. Solar did really well this week, again up 2.6. I'm still in that ETF, the Solar ETF. The home builders were strong. The regional banks were strong. The semis, so pretty good market breadth. Good to see the financials and the banks do well. Healthcare is continuing to rebound. I thought also, I'm not going to go over these charts in this video, but also the medical devices group has been quietly rebounding very nicely after a very hard sell-off a couple weeks ago. But that's been grinding nicer. If you look at names like TMO, Abbott, EW, those names have been really recovering quite nicely. And then on the negative side, you have oil, again for the second week in a row, getting completely crushed. SLX, I'm sorry, not oil services was down 4% 2 weeks ago. XOP was down 2% this week, just down huge again, and breaking down a bit. Down 5.6% was OIH. XOP down another 5%. And I've got all three of the energy ETFs, XLE, in there as well. Today it was nice. Steel came back a little bit today after getting sold off. You don't see that on the up or the it is over here. SLX was up 1%, but U.S. Steel had a nice rebound today. So good to see that, and a decent quarter being turned in from those guys. In terms of international performers, we already hit upon them, but Argentina had a big day today. That performance, that 8.7% performance, was basically all today. Hong Kong was strong. I don't see the Chinese internet's in here. Oh, they're on my other list. They're on this list, 2.7%. I want to look at that chart next, because we detailed this in last weekend's newsletter. I just never pulled the trigger on it because it just I was waiting for the right signal. Tough when the signal comes about on Friday, because generally on Friday I don't like to add a lot of risk. I like to be taking it off, and then kind of start with more, not a complete clean slate for the weekend, but it always helps me to do that. and I want to talk about how we managed this week. I'll spend a minute or two talking about how we managed risk this week, but always like going into the weekend, not because I'm worried about something that's going to happen on the weekend, just because it helps me mentally just kind of get ready for the week with a little bit less risk on and not being so married to my current positions. Again, it's a big thing mentally to kind of clear your mind and be objective as possible. And for me, I become more objective about what's going on in the market when I have less positions on. So yeah, this Chinese internet ETF looks wonderful. And the top weights in this, which I'm not going to go over, but BABA reports soon. I think BABA reports maybe next week. But BABA did get over this version point of control, which I talked about. I guess 2 weeks. So maybe BABA continues to run. You have another version point of control up here. As I mentioned before, JD has seen call buying and got an upgrade this week. It's starting to look okay. Again, it did not get above the value area, so not yet for JD. But this whole group, going back to KWeb, I think is one of the better looking charts out there right now, in my opinion. So really strong. All right, so that's a recap of this week's performance. I started to talk a little bit about how I've been managing risk. Let me bring up. This was my portfolio. I don't think I've had a chance to really talk about this. But this is my performance for end of April. Pretty good. I've been outperforming. Somebody responded back to me and says, "Hey, really nice, steady as you go. I haven't had a negative month." Of course, the market is helping here, right? I mean, I talked about in the beginning of the video a nice investment landscape. We've been pretty lucky with that, right? We've had that all year long. So I'm capitalizing on what the market is giving me right now. So for May, and the important thing is, right, to forget about this for the month of May. Don't be hooked into, okay, I've been getting overconfident. Take each month and try to win each. I always talk about the Bill Belichick approach, right? Winning 1 month at a time. And at the end of the year, you'll do very well, just like they always make it into the playoffs, and half the time they win the Super Bowl. But you always listen to Bill Belichick in interviews, and he always says, we take one game at a time. We're not looking ahead. So concentrate on May. My plan for May, and it was nice because we polled the room, and right in the beginning of the month, we said, what do you think, up or down for this month? And it was kind of a tepid response. But so that's the thing. If you're not sure, so my goal is to outperform the S&P. If the S&P ends up being down for the month, I want to do better than that, right? If the S&P is up a couple percentage, I want to do better than that, just like I've been doing all year long. That's the game plan. So again, it's not to be overconfident and to flaunt results. It's just to continue along with the process. And sometimes, so. By the way, so this performance, right? So what have I been? I've gotten some questions. What am I doing? How are you trading options? I'm just being real. I would say I'm not overthinking things. I'm not getting. All year long I felt really comfortable about my risk. Very few times this year have I felt like I've gotten over the tips of my skis with risk. I talked about that a lot in the trading room today. Just about making sure that I'm really not against short-term options, but I think they're just overly used by retail traders. So I talked about how going out a couple months, having some stock positions in names that have a really high implied volatility, but capitalizing on some short-term option moves with some high-price stocks like Amazon. I got a little bit lucky today with Amazon, but I had a call spread on, not outright calls where I don't feel like I can't sleep at night, but I have a call spread on, and I put this call spread on for $8 and then added to it at $6, so my average cost basis was $6.50, and I'm taking it off today for $9 and $10. I mean, that's a really nice. And then the goal is I don't need to make doubles and triples. I just need to kind of continue to have those nice 40-50% winners for only holding a couple days. So again, you don't. I don't need to have those doubles and triples and crazy things like that. I just need to kind of be consistent with my trading, and then also just watching that risk. And if I get a bad feeling, like I was a little bit worried going back to where we were Wednesday. I took off some trades Wednesday morning prior to the Fed, just being smart and not being I don't want to use the word stupid, but not being stupid into a Fed day when I think it's 9 out of 10 Fed meetings that Powell has resided over, the market has gone down. I mean, these are numbers that just the market doesn't like Fed days. It's not rocket science. So I took off some trades, even trades I didn't want to, but that also frees up my mind so I can concentrate on what's happening on the tape. I took off. I'll give you. These were winner. These trades are looking fine. Like Palo Alto, I took this trade off like the next day after I put it on Zscaler, just so I could free up my portfolio a little bit and making sure that I'm not getting caught. So sometimes you have to do that. And of course your broker's going to love you for that because they're going to earn a little bit more commission. But really having that fresh mind so that you can take the new information that you're getting on the tape and process it. I talked a lot about that at the end of the day today. Right? So we talked about, I will always give these summaries. Good idea to go through your positions, and especially with options, right? Stocks are different animals than options. Options are very sensitive. They can move around a lot. One of my sayings is all the time that they don't option positions do not age like a fine wine. You have to always be adjusting these things. So or at least managing the risk, rolling out and up, doing things, making some adjustments, and going through the charts at least a couple times with some of the positions that you have on, and say, does this chart look like I would want to enter the trade in now? Right. So these are all things that I think make sense to do regularly, and to not be so concerned about taking a position off because that means I was wrong putting it on. Um, I think you just have to kind of go through that and cut positions every now and then, and so that you can kind of just roll with the market a little bit more, right? So that's kind of how we've been doing it. What else? Some trades that we did this week. So I am back to 2019 P&L highs. I was down a little bit of money on Fed day, very small, down a little bit of money yesterday, but today, we had a huge day, right? These were some of the trades that I put on yesterday. I did buy the dip a little bit yesterday. I thought that looking at things like IWM and all things that I've already talked about, it made sense for me to kind of get into some positions. But yeah, I mean today, the Amazon was beautiful. Google, I thought yesterday that after 3 days, I thought it was a nice place to put on a little bit of Google short-term options for that was a short-term option play, and and then you could see some of the other trades that we put on here as well. New trade, also option activity today. I always like to kind of go through. I think McDonald's, if you remember, had a great earnings report, and they actually, they ran up a little bit into the report. They sold off today. Big option call buyer comes in, so I took that trade today. Like I said, I don't like to take a lot of risk on Friday, but I was like, wow, McDonald's has come in nicely right into support and closed right around the highs of the day. Also, Berkshire, which I heard CNBC just going over a minute ago, man, that was a great trade as well. That we put on, just kind of reading the tea leaves a little bit, but this was a huge winner for me as well. All right, so that's it. So I did try to unwind a little bit of risk going into next week, but I didn't really take off that much because I actually like a couple of things that I'm in. I think the J&J chart is moving in the right direction. Again, continue to take profits with some of these option trades, but I think a number of trades that I've got on look pretty good so far. So That's it for the weekend. Again, great job, everybody, on just dealing with a huge amount of information. And if you want a little bit of guidance in what you're doing, I don't give out any recommendations or advice or anything like that, but I'm here to help. Someone mentioned the other day that sometimes I dislike the backhanded comments on Twitter, talking about uh, subscriptions and so forth. Hey, I do this for a reason. I'm here to help traders. We have a great time in our trading room. Everybody's trying to help each other. We have an outstanding community of traders, and really, that's what it's all about. Like, I understand that there's a couple bad parties out there, and they ruin it for everybody when they talk about a trading room and so forth. But our service is a lot different than what you will find out there. We're all in the same boat. Nobody is really being cocky or anything like that. Cockiness will kill you. So don't be cocky, don't be overconfident. But we're all in this to help each other and help each other have great results throughout the year, right? And not hit any landmines throughout the year. So that's it. You can visit us at tribecatradegroup.com, or you can email me. cfromhertz at tribecatradegroup.com if you have any questions at all. Have a great night. Have a great weekend. And I'll see you guys on Monday.